Oh, no kidding. Anglo-Platts 510. 200 Impalas. Yeah, right. It just make it overweight, but. All right. Good morning, everyone. Let's get going. Okay. All right. U.S. markets actually made a little bit of a pullback last night for once. We've kind of been in the slow grind higher. Last night was really, I would say, in my mind, a victory for the bulls because the pullback was very light. Same thing on quite light volume, and just in keeping with a real bullish equity market. So you can see that most of the sectors came lower except for tech, which was obviously supported by Apple, but just I think a reasonably benign pullback, and nothing to get worried about yet. I was actually quite surprised the market held as well as it did yesterday, especially Asia. After some of the news out of China, the PMI numbers, also the fact that they're not going to be doing any, that there's not going to be any building going on for the government for the next 5 years, which is really where most all the demands come from. I thought markets actually held relatively well. We also had PMI numbers out of the Eurozone at an 18-month high of 50.4 in July, which is the first expansion we've had in quite some time. I think it's this is a big story. I mean, you saw the DAX traded really well yesterday relative to a lot of the other indexes. Europe has just been a drag and a monster laggard on global growth now for a long time because we've obviously been in recession there for the most part. The fact that we're coming out of that, it's quite significant. We're at about, I think it's 20% of global economy or something along those lines, the Eurozone, or 23% maybe even. So the fact that we're starting to turn up and starting to see a little bit of expansion there is, I think, bullish for global equity markets going forward. So just keep that in mind, that there's a lot of there's a lot of negative sentiment still out there in terms of Europe. Europe could definitely start to see a little bit of outperformance relatively because of the turn in the data that's starting to come there. We also saw Caterpillar yesterday, which missed pretty big, kind of giving Jim Chanos another win under the belt after he made comments the other day. It's one of his bigger shorts. Their expectations on global growth, they downgraded yesterday to a little over 2%. So they obviously see, those kind of forward-looking indicators in terms of the purchasing that are coming out of companies to do construction, to do mining, all those kind of things, and they're not seeing the demand there. So I really think that that Caterpillar number yesterday is a little bit of a canary in the coal mine. I just really think that there's a hell of a lot more to that number than the market actually even took it as. I do find it surprising how well the market's been shaking off all the bearish news, and maybe we continue to grind higher for a little bit long, but I think the fact that earnings have been soft, you got these things, the negative China news, the Caterpillar numbers that have been so poor. I just really think that the market's going to struggle to continue to perform well in the face of all this. All right, Asia mostly fell across the board. I think we had Hong Kong that was up a touch. In fact, it's down now, 0.25%. So they're all red, but relatively small pullbacks for the most part, except for Japan. So I think same sort of thing in keeping with a bull market. We're getting tiny little pullbacks, and then just kind of grind higher on small volume, over the longer term. We saw a pullback last night in some of the precious metals, especially gold, a little bit out of copper, and we saw a nice pullback out of oil as well. So I think it's something that we're going to need to watch. I mean, maybe some contribution from what we saw out of CAT and those kind of things, but we'll watch that going forward. All right, we have a lot of earnings that were out yesterday. Obviously, Qualcomm, which was in line on EPS, a beat in the revenue number. We had Visa, which was better than expected on EPS and on the revenue number. We had Credit Suisse out this morning, net income of 105 billion, expected 103 Swiss francs. We also have Facebook that was out last night after not after hours. I think it was during the session. It was up about 20% after they had huge revenue growth on the back of ad sales. Then we had Longman Q3 production report out this morning. They mined 2.3 million tons. That's down 3.6% year on year, but up 4.1% quarter on quarter. Platinum sales were down 45.9% to 81,382 ounces. And Q3 USD bracket price was down 5.9% to 976, but I would assume that the Rand price is probably slightly up. All right, today we've got a Q1 sales update out of SAB Miller. We'll try to tweet some more information out on that a little bit later. That's going to be big. You know, one of the things we talked about a couple days ago was how there's been 3 trading updates in a row that moved SA Breweries 20 Rand. The last 3 trading updates moved to SA Breweries 20 Rand. All 3 times I believe it was to the upside. But you know, this is incredibly important and can really get the stock moving. So just be careful of that today. It comes out at 12. Be ready for that. We also have Biogen, General Motors, Colgate-Palmolive, Bristol-Myers Squibb, Starbucks, Gilead, and Amazon out today. We also had Amplats, which was raised to neutral at B of A Merrill today. We also had Impalas and Amplats that were raised to overweight today at HSBC. Price target on Impalas 200 Rand, more than twice the current price. Price target on Anglo Platinum 510. That's also close to twice the price. So some of these platinum stocks getting a solid upgrade here. Market data out today. Unemployment rate at the open out of Spain. We've also got the IFO Business Climate Index out of Germany. Remember this IFO number has really been getting markets moving lately. We've got Italian consumer confidence. We got M3 money supply out of the Eurozone at 10. We've got UK GDP for the second quarter-on-quarter number. We've got initial jobless claims, obviously the biggest number in the States at 230, and durable goods also at 230 in the States. So I'd say the ones to focus on are well, there's actually some quite important data today between the German numbers, the UK GDP, and then the numbers at 230 in the States. All right, let's jump into the maps. All right. First thing I want to have a look at here is U.S. bond market. This is the 10-year in the States. It's the one that everyone's focusing on. You can see here we've obviously been we're looking at yield here, not the bond price. We're looking at the yield up at 2.6% as of the close yesterday. And you can see here we've broken out of this little flag pattern to the upside. The reason why I'm pointing this out is because this really got markets moving lower previously about a month and a half ago when we saw that big sell-off. That was during this prolonged move and this really steep move to the upside. As we've kind of been drifting back down here, markets have been grinding a little bit higher. So I really think that this is important, and it came obviously with a pullback in the S&P, no coincidence. So I think this is probably one of our best leading indicators at the moment. We're going to want to see, especially if we can take out highs up around 2.75%. If we get above 2.75, I really think that it can be a catalyst for a real sell-off in the market. Guys, this should be the number one leading indicator that we're watching right now, so just keep it on your screens. If you don't have it, if you can get it on some sort of delayed data source, you should be able to get it at least from Google Finance or something like that. All right, let's look at the Aussie. We've been looking at this more or less every day, but I guess it's something that we should be looking at quite often here locally. Again, 36,500 is the main level. Once again yesterday we failed it, and I think it's really important that 2 days in a row we pushed through 36,500. The market looked incredibly strong 2 days in a row, weren't able to hold it, especially yesterday. The way that we were trading so strongly the entire day, and as it couldn't hold, we've really just we just kind of broke down to the downside there. You can really see, I think the breakthrough here, the breakdown will be about below 36,000 to give it proper confirmation. Obviously, we failed at the significant 36,500, but if we break through, and you can see the significance of this level as well, all the touches we had all around in this area, we failed to the right end over here. We also struggled to get through here. The 36,000 is quite a significant level as well. If we can drop 36,000, technically we'll have broken that support, we'll have broken the little upward sloping wedge here. I really think we could see significant downside from that. I still think it's significant that our market's been kind of failing as the U.S. markets have been just continuing to grind higher. So I do think that there's downside in the Aussie, especially if we get below 36,000. There could be a good 1,500 points from there. All right. Bulletins. Just wanted to show bulletin on the, I know we talked about this yesterday in the longer term chart. Let's have a look at the 10-day real quick. You can see here we closed below 84.20, which is really where quite a significant level. If we move that further to a 30-day here, you can see how important that is as well. I don't have the whole thing fit on here. Okay. You can see how important it is as well. Right there, I'm going all the way back to there. It lines up quite nicely. I'd say somewhere around 284, which is exactly where we closed yesterday. It's kind of the breakdown point where we did bounce up to kind of close at that level. But if we're not able to hold above 284, I think we've got significant downside in the short term. I would kind of line that up maybe somewhere in here around 274, 275, somewhere in that neighborhood. I think we could get down to quite quickly in bulletins. All right. Let's have a look at Kumba. The reason why I wanted to show this yesterday, 2 out of the last 4 days, you can see there. I mean, let's go into a 5-day here. I mean, this thing has been zigzag. I mean, it doesn't look all that impressive until you realize that range is $30. So I think it's important to see kind of this. We've obviously been bouncing in this pattern, and the kind of bottom end of this pattern is where we closed yesterday at 446. So if we back it out a little bit more, and same sort of thing, if you look at this on a 30-day or a 30-minute, you can see here. Sorry, you can see how we're kind of pushing up against, falling below this level, and falling below horizontally as well. If you look a little bit longer term, I would like to maybe put this level more at 435 to really give us a confirmation of a breakdown, an inverse cup and handle probably. And we've also, I mean, we're kind of dropping a bit of of support here in terms of the recent little uptrend that we've gotten into. But the fact that we've had such big down moves, I think 4 of the last 5 days, coming after earnings, I think obviously China had a lot to do with this one yesterday. It's surprising to me that Anglos and Billetins didn't get hurt more, because obviously iron ore is a big part of their income. But watch this closely. If this thing drops 435, guys, it most likely is going to absolutely decimate it. So just watch it really closely. I know we've shown it a lot over the past little bit, but it's really setting up for a breakout one way or another, I think. Okay, Aspen yesterday on the renewal of the cautionary bounced up to this 220 level. Actually traded above it for a while. You can see we closed just below it. I just wanted to throw it out there again, stress the importance of this level 220. Obviously, this is where we broke up from. And it was a really steep move. I'll watch this one closely. If we can get above 220 today and hold above 220, I would easily think that this thing could retest highs over the next few sessions. All right, let's look at Steinhoff. Steinhoff as well, a little upward sloping wedge here. This one's held up better than most of the other retailers. You can see on a closing basis, we closed right at support at $26. If we drop 26, I think that this thing could also start to fail like some of the other retailers. We kind of also a bit of a false breakout there. We tried to break out, couldn't really break out above 26.80. We never actually closed above it. You can see here on this red candle, we opened nicely above it, traded up above 27 even, and then closed back below it. So maybe a bit of a fake breakout to the upside, and then all of a sudden we're going to drop 26 here and could be breaking to the downside. So watch Steinhoff. This one could have some more downside to it if we get below 26 today. All right, let's look at SA Breweries. Rudder was going over this with me this morning. You can see here, we've been looking at this in a very bullish light, and I think the pattern has been bullish. But the fact that we've tested so many times up here recently around this 294, 295 level, and haven't really been able to break through is quite bearish. Now, what's happening here is we're starting to form a bit of a potential head and shoulder pattern here. Obviously, this thing's still in quite a bullish long-term chart, but you can see here technically, in terms of a closing base, this little upward sloping wedge that's going into this thing. We're looking very ready to break out here one way or another. But right now, it's actually looking a little bit. It's starting to look a little bit more ominous because we haven't been able to take out kind of the right side up, right shoulder here to the upside. So we don't break out to the upside, I would say, even today. Today, I think, is the most critical day for breweries, and that's why I would stress that the trading statement today, we will, in my mind, without question, break out of this little narrowing wedge that we've kind of been in, this moving out to the right here. If we drop, I would say, especially if we can drop, below yesterday's closing levels by a rand or two, or if we can get above the 494 level, one way or another, we should have a sharp move either way. So I wouldn't be surprised to see a quick move down to at least 460. On a day like today, if the numbers come in poor, if they're good, I also wouldn't be surprised to see a move up to 500. So just be really, really careful dealing in it today. Watch when that trading statement comes out. Don't necessarily try to make a call on it one way or another. Watch for the action to give you confirmation. All right, and then the last one, I'm going to show a little international flavor here out of London. We'll have a quick look at British American Tobacco. We talked about this chart a while back, and we were looking at the significance of this 3460 level, and we really just kind of broke down out of it yesterday. As you can see, the day before yesterday, we can see we kind of came back up yesterday, tested, failed, closed below it. I really think today, the right price, this could be a nice little short here today in British American Tobacco. And that's it for today, guys. Thanks a lot.